These notes are from Profitnama's NISM Research Analyst Guidebook. You can find the link in the description below. Now, we are going to learn about inflation-protected securities. Inflation-protected securities are special types of debt instruments designed to deliver returns that adjust with inflation. This means they help protect your investment from the negative effects of high inflation. Risk management. These securities are important for managing risk, especially during times of inflation. They safeguard against negative real returns, which is crucial for retired investors who rely on fixed incomes. Inflation-indexed bonds, IIB. One common type of inflation-protected security is the inflation-indexed bond, or IIB. These bonds are issued by the Reserve Bank of India, RBI, and offer returns that are protected against inflation. Both the principal amount and the interest payments are adjusted based on inflation, ensuring that your investment maintains its value over time. How do they work? The coupon rate on these bonds is a fixed real rate applied to the inflation-adjusted principal. For example, if the inflation rate increases, both the principal and the interest payments will rise accordingly. This adjustment ensures that your returns keep up with the cost of living. Maturity payment. When the bond matures, you receive the higher value between the original face value and the inflation-adjusted principal. This means you are guaranteed to get back at least the amount you originally invested, adjusted for inflation. Index ratio calculation. The adjustment for inflation is calculated using the index ratio. This ratio is derived by dividing the reference index on the settlement date by the reference index on the issue date. The wholesale price index, or WPI, is commonly used to measure inflation for this purpose. Options for retail investors. For individual investors, the RBI offers inflation-indexed National Savings Securities Cumulative 2013. These bonds have a 10-year tenor and are available to individuals, minors, Hindu undivided families, HUFs, and charities. They provide a fixed interest rate of 1.5% plus the inflation rate based on the Consumer Price Index, or CPI. Compounding and payments. Interest on these bonds is compounded semi-annually and paid along with the principal amount at maturity. Even during periods of deflation, the fixed interest rate ensures that you receive some return on your investment. Taxation. It's important to note that the interest earned from inflation-protected securities is taxable based on your tax status. Be sure to consider this when evaluating your investment options. Inflation-protected securities are a valuable tool for investors looking to protect their investments from inflation while still earning a return. They are especially beneficial for those who want to ensure their savings keep up with the rising cost of living. The Profitnama guidebook is available as a downloadable PDF and in printed book format. We also offer cash-on-delivery options. Get the link in the description below. By becoming a Profitnama member, you'll have access to all our website content and receive doubt-clearing support on WhatsApp. Visit Profitnama today.